5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Inflation angst, global stocks and bonds retreating as more data, and oil supply woes fuel concerns over price pressures. Turbulence at Westminster, guilt tumble as Prime Minister Starmer faces challengers. And it's a wrap. The Trump-Xi summit concludes with both leaders touting stronger ties. We're set up for a pretty turbulent day in markets. Let's get a check on markets around the world now, and with a lot of red across Asia already. Here's Alice French in Tokyo for the latest. Alice.
Good morning. Yes, as you say, we've had a down day here across Asia. The Nikkei having a bad day, partly on earnings disappointment. But as you say, we have had a lot of worries about inflation and oil prices really weighing on the benchmarks. You can see the Kospi down. Samsung, of course, one of those momentum AI names, also having a bad day. Now, you mentioned their bond yields, and they have been weighing on sentiment in the equity market too. We saw Japan's 30-year yield rising above 4%, really getting up there. Now, of course, this is part of a continuing trend, and we know that it's happening in the US and UK too, but really hurting sentiment here.
Absolutely, Alice. Thank you so much. Alice French there in Tokyo. Let's get to London now for a look at what's happening across Europe. Here's Louise Moon. Louise.
Morning, Ivana. Well, it's a similar story over here, but obviously with the added addition of the political turmoil. So gilt slumping, yields rising. As you see, this is being played out roughly across Europe on these wider concerns of inflation that we're seeing globally. But that political turmoil in the UK, that this potential leadership challenge for Starmer playing out in the currency, the pound weakening against the euro, and we're seeing similar moves in equities as well. So if we take a look at the FTSE 250 compared to the FTSE 100, this is the more domestically heavy equity market we're seeing here. It's up slightly, but, underperforming the FTSE 100s. This is, as I say, these worries about potential leadership challenge and what that will mean for future fiscal spending.
Louise, thank you. Yes, all coming to a head today. And if we look at the picture in the United States, it also looks like that rally is going to get arrested in equities, at least, with futures pointing lower on the Nasdaq and the S&P 500. It would still be 7 weeks of gains, though, for the S&P 500 in spite of today's weakness. Now, if you look at why, look at the 10-year yield. We're above 454. Remember when we were just looking at 450 as a potential barrier? Well, we have crossed through that barrier now, and in fact, the 30-year yield is well above 5%. 507 it was hitting a little bit earlier on today. If we flip the board, we'll see why. Partially it's because of oil prices, right? We have New York crude almost at 105 a barrel, and Brent crude right back to above 109 a barrel. The dollar index as well gaining today above 99 on DXY, and that's partially thanks to weakness in sterling today. But lots going on in these markets. It is a Friday, and there is potentially a lot of de-risking happening. All right, let's get to some individual movers now. Chloe Melly is in London. Chloe.
Good morning, Bonnie. Figma is up very strongly this morning, about 10% in pre-market trading after posting better than expected results and raising its guidance. This is a design software company, and of course this is now easing those concerns around the AI disruption that had been really plaguing the software sectors. And so it seems that investors and analysts are thinking that Figma is able to really stand out amongst those software companies. Moving on to Microsoft, which is also in focus this morning after Bill Ackman's Pershing Square said that it will disclose a new position in Microsoft, and we're seeing a little bit of weakness on the back of that this morning. And finally, Applied Materials is also in focus today. We had very strong second quarter results, but it's a little bit of weakness because it is getting caught and swept up in this broader sell-off across the chip sector that we've seen in Europe and in Asia as well. And so we're up about 3% down about 3% this morning for Applied Materials.
All right, Chloe, thank you so much. Chloe Melly there in London, and a great lineup for you this hour. We're going to catch up with JPMorgan's Kelsey Berro on this inflation angst that we're seeing percolate through bond markets. Plus, former US ambassador to China, Nicholas Burns, joins us as the Trump-Xi meeting wraps up. So a global bond sell-off intensifying as higher oil prices and the latest string of economic data stoke inflation fears. The 2-year yield at the highest since March of last year, while Japan's 30-year yield hit its highest since its debut in 1999, reaching 4% in the last couple of hours. Let's get to Bloomberg's Ven Ram for more. Ven, what happened? How come the bond market suddenly woke up in the last 12 hours?
Morning, Moni. It's the nature of bond markets to slumber and to sleep through what is a global inflationary shock and then suddenly discover, you know what, we have got an inflation problem in our hands. We got a taste of that with the US data this week, Moni. I mean, headline CPI around 4%, producer prices well above 5%. That is obviously not compatible with the idea of 2% inflation. And if you look at inflation break-evens, at the front end of the US curve, they are factoring in a low inflation trajectory of well north of 3%. So the question that the bond markets are starting to ask, albeit a bit too late, is whether the Fed is in the right place. The Fed's mid-rate is at 362.5. That is not compatible. It is completely inconsistent with where we are and the trajectory of inflation. So I think that the path of least resistance for yields is to go higher. I've been saying for weeks now that the two-year yield is underpricing, the two-year tenor is underpricing the risks of inflation, and I'm glad to see it march above 4%. I think that the 30-year yield also faces upside risks because of deficit and the inflationary import of longer-term inflationary import of this oil shock, Bonnie.
Yeah, we are at 509.40 now on the US 30-year yield. How much further can we go before this becomes a little disorderly then?
Well, I think that, you know, if it goes anywhere towards 520, I think we will have Treasury Secretary Scott Bessent come out and say that, look, yields are unjustifiably high, but it is for the markets to price the inflationary fallout. And the US's fiscal metrics are no good. Obviously, we've got a budget deficit that is out of control. So we've got a multitude of factors weighing into this, and it's not going to be a quick and easy resolution to get it back to below 5%, which the administration has somewhat more of a comfort level with.
And absolutely, the Japanese authorities will be watching the yen as well, priced above 158 at the moment. Ven, thank you so much. That is Bloomberg's Ven Ram. Over in Beijing, both countries, the US and China, looking to stabilize their trade relationship on day 2 of the Trump-Xi summit.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years. And we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area. And then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
Joining us now from Beijing is Bloomberg's Anne-Marie Hoydern, who spoke exclusively to the US trade representative there, Jameson Greer. So, Anne-Marie, was the USTR happy? He touted a lot of what had been agreed upon previously and what will be done eventually, but nothing that concrete from this particular summit.
Well, trade is clearly the biggest win for this administration as they wrap up these 2 days here in Beijing. The president already off back to Washington. But what is interesting is, to your point, Vani, there's nothing quite clear in terms of the deliverables, and potentially throughout the next few weeks or maybe days, we will get a little bit more clarity on exactly what was discussed and what was agreed upon in these meetings. The president, in a Fox News interview, talked about 200 Boeings that the Chinese were willing to buy. We have not gotten confirmation from Beijing on that yet. It's also notable that going into this, the expectation that that order would be much bigger, maybe closer to 500 Boeing jets. Jameson Greer, the USTR representative, spoke to me about massive agricultural purchase. Of course, we were going to want to see the clarity of that the next few weeks and days when it comes to on the Chinese side. And then also what I took away from that conversation with Jameson Greer is that all this hype was about maybe because Jensen Huang was a last-minute addition on this trip, that chips were once again going to be back at the negotiating table. Jameson Greer said semiconductor export controls really didn't come up in terms of the bilateral discussions the president had with President Xi Jinping here in Beijing. And a lot of reporting about when and if China is going to allow their firms to purchase the H-200s. Reuters had a report that the United States greenlit Alibaba, Tencent to buy those chips. And Jamieson Greer said at the end of the day, it's going to be up to the Chinese. And we have not yet got clarity from Beijing on whether or not they're going to allow those firms to buy those H-200s.
Yeah, so NVIDIA's future in China is still a little bit up in the air, and even Jensen Huang basically said, no, we weren't here for that reason. We were here to support the president. So, Anne-Marie, in terms of foreign policy then, any steps forward in terms of China help on Iran?
Well, the president continues to talk about how Xi Jinping is willing to help on Iran. He also made remarks that Xi Jinping and China is willing to buy more U.S. crude. On Iran specifically, he talked about how Xi Jinping does not want to see a militarized Taiwan Strait. They don't want to see a toll when it comes to what's going on in Iran. They don't want to see the regime charging ships to be able to use the international waterway, and that they too agree that Iran can never get a nuclear weapon. Of course, the issue is we're getting this readout really from the White House. When you look at the Chinese readout, their main focus when it comes to national security has been Taiwan, and that is something that we have not heard yet from this White House.
All right, Anne-Marie Hordern in Beijing. Fantastic reporting. Thank you so much. Now to other top stories trending on the terminal this morning. A group of former Wall Streeters known as DLTM6 is working with the Pentagon to crack China's critical minerals stranglehold. The team is racing to put together deals with billions of dollars in equity stakes, loans and other financial tools to challenge China. Critics warn that the Pentagon's rush to do deals has led it to back unproven companies and overlook potential conflicts of interest. The United Arab Emirates will double its capacity to export crude oil, bypassing the Strait of Hormuz by next year. According to the Emirates media office, Abu Dhabi National Oil is accelerating the construction of a pipeline that runs to the port of Fujairah on the Gulf of Oman. LVMH is selling the Marc Jacobs label to WHP Global. It's a rare divestment for the luxury group. LVMH looks to capitalize on its higher-end luxury offerings, such as Louis Vuitton and Christian Dior. Coming up, gilts tumbling as Prime Minister Starmer braces for challenges. More ahead. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Gilts slumping and the pound heading for its worst week since 2024 against the US dollar. That says Prime Minister Keir Starmer's rival and Mayor of Manchester, Andy Burnham, clears the path to potentially challenge Starmer for that top post. Bloomberg's Lizzie Burton joins us now from outside Downing Street. Lizzie, where does Andy Burnham rank alongside the other potential candidates?
Well, it has to be said, Vonnie, no formal challenge has been issued yet, but Burnham is Polymarket's favourite to replace Starmer, and he's the only senior UK politician who polls positively among UK voters. That said, though, there are many hurdles in his way between where he is now as Mayor of Greater Manchester and that black door. He'd still have to be cleared by the National Executive Committee of the Labour Party. He'd have to win the by-election in Makerfield, the seat that is being opened up, and he'd have to beat Reform, where they've performed well at the 2024 general election, though Burnham reportedly wants to take on Reform, so he can say, I beat them in the by-election, I could beat Farage, Nigel Farage, in the general election. But even if he managed that, Vonnie, he'd then have to get 81 Labour MPs to back him to go into the leadership contest, and then he would likely face Angela Rayner, the former Deputy Prime Minister, and Wes Streeting, the former Health Secretary, who of course resigned this week. All of this going on, all of it putting pressure on the market, given the political uncertainty.
Yeah, I mean, we're seeing the pound under severe pressure, gilts too, obviously. Is that going to impact the contest at all, given that, you know, this is the top post and sure, direction comes from the top, but the Chancellor, Rachel Reeves, has her hand on, effectively, fiscal policy too?
Yes, and the Chancellor herself has said that this leadership battle, the speculation, the chaos will be damaging, and pointing out, of course, that as you see gilt yields rising, you see the cost of living rising for ordinary Britons. Now, nonetheless, the detractors for Starmer, dozens of them calling on him to resign, looking through the market moves, we're looking at the pound heading for its worst week since 2024, and yields just keep rising. But for the detractors, they're focused on reform and the Greens, the opposition parties that were beating them in local elections last week. Of course, it's easier to be offering goodies when you're in opposition than when you're in government, as Starmer and Reeves well know. And so it seems like these challenges are going to be inevitable.
We're just seeing a whole class of school children go into 10 Downing Street behind you, Lizzie. So I guess a lot of people think they could be potential challengers. That is Bloomberg's Lizzie Burden reporting for us outside 10 Downing Street. Coming up, in Washington, the House blocks a vote to end the war in Iran. That and what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The market's AI boost showing no signs of slowing, at least for the week. Nvidia up 20% over the past week. Ford hitting that 20% check mark in just 2 days on a possible hyperscaler deal. Bloomberg's Tom McKenzie spoke to OpenAI CRO Denise Dresser about the return on AI spending.
So the more we invest in compute, the more intelligent and capable the models become. And that means then our customers can actually derive more value out of it, and they can do more things and deliver more economic value. And that becomes a cycle for our business. And I really do think that we've been very forward looking in that. And then, as I mentioned, the demand is sort of a vertical wall right now as enterprises think about how they roll out not just productivity, but a true AI platform in their organization.
Tom McKenzie joins us now, anchor of Bloomberg Tech Europe. Tom, are we still in a sane phase, or have we moved a little bit out of that? It sort of reminds me of the time when everybody was becoming a blockchain company, or a Bitcoin or a crypto company, and their shares would soar. Is that what's happening?
I think to your point, when you look, Vonnie, at what's happening with Ford, you flagged this up 20% in what 2 days in terms of the energy unit, and an analyst note pointing to the potential upside there, built on a license and IP from China. Interestingly, maybe the kind of moves that we've seen in Ford in recent days suggest there's a little bit of frothiness in the market. But what you're hearing from OpenAI is that the demand is there, the demand is real, and the demand is accelerating. And for them, that justifies the spend on capex and on infrastructure, because their clients and customers are saying they need more of this, they need to integrate it more, and they want to be able to use it more. And that's certainly what we heard from the CRO, or the Chief Revenue Officer, when she was speaking yesterday. In fact, Germany and France are amongst the top 10 customers now in terms of sovereign customers for this kind of AI capability. And what OpenAI were really trying to stress was that enterprise is becoming an increasingly significant part of the revenue stream for them. So they've got 40% of their revenues come from enterprise now. They see that moving to 50% by the end of this year. They have 9 million companies paying for their products. They're really trying to reshape the narrative, and a narrative out there that Anthropic has won on enterprise. OpenAI is saying, hang on a second, we're also playing in enterprise. We've got the consumer, and we're playing in enterprise, and we are seeing that vertical wall of demand. And interestingly, the CFO of OpenAI is saying, yes, we've raised 112 billion, the biggest capital raise, the biggest fundraise in history, was how Sarah Fryer characterized it. But we could be looking for more as we build out infrastructure to meet that demand that we're seeing from our clients.
Tom, I want to ask you about yesterday's IPO. Cerebras debuting as the year's biggest IPO so far, at least. Shares were up 68%, but at one point they were up 108%. What does it say about appetite for AI companies?
Well, some of that spending that we've been talking about from OpenAI and from others, it's filtering down to companies like Cerebras, and clearly it's benefiting from that. Clearly investors think it will be a beneficiary. Certainly good news for Feldman, the founder, of course, of Cerebras, which offers these chips that are about the size of an A4 piece of paper. They're much bigger than other competitive chips out there, like GPUs from NVIDIA, for example. And what they specialize in is inference. So when you actually use the models, and that's why they say they have that competitive advantage and where they're seeing that demand. OpenAI uses them, and others are starting to use these Cerebras chips as well. So investors clearly think they're positioned to win, or at least build out market share there. And certainly for the founder, he's come away valued about $3.2 billion US dollars, his stake currently in that company.
Yes, a nice day for Mr. Feldman yesterday, and shares were higher in the pre-market, down just about 0.4% now, but quite volatile. Tom, thank you so much. Bloomberg Tech Europe's Tom McKenzie there. Time now for your front page news. First up on the New York Times, the House narrowly blocking an effort to force an end to the Iran war and require President Trump to get permission from Congress to continue Middle East operations. The Times says the administration continues to defy legal deadlines, causing two vulnerable Republicans to join Democrats in that vote, which was ultimately unsuccessful. Next up on the Washington Post, the Supreme Court's decision preserving access to mail distribution of the commonly used abortion pill. The justices paused a decision by a New Orleans appeals court that had reinstated a requirement for patients to pick up the pill in person. And finally, the Financial Times reporting McKinsey plans to cut the share of profits that partners take home in cash. It's an overhaul designed to simplify pay structure, boost capital, and protect McKinsey from AI turmoil in the consulting industry. The FT says McKinsey told partners to expect a greater proportion of pay in the form of equity. Let's take a look at these markets on what's shaping up to be a pretty traumatic Friday for some, I'm sure. We have Brent crude now trading above $109 a barrel once again. As you can see, S&P futures pointed to an open lower by more than 1%. The dollar index stronger as sterling continues to weaken. Sterling at 133.36 now, down about 0.5% versus the US dollar. And yields fascinating. The 10-year yield above 4.54 now. The 2-10 spread at about 47 basis points, flattening all the while. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Inflation angst, global stocks and bonds retreating as more data and oil supply woes fuel concern over price pressures. And it's a wrap. The Trump-Xi summit concludes with both leaders touting stronger ties. Don't miss our interview with former U.S. Ambassador to China, Nicholas Burns, as President Trump heads back to the United States. So a real change in sentiment today. Trump saying we don't need the Strait of Hormuz open. That seems to have turned the market. That and the fact that the China visit is now over and there wasn't really a huge amount in the way of deliverables. So we have S&P futures pointing to a lower open, NASDAQ 100 futures in particular. Bear in mind that's after scalding rallies all week. And we'll still likely get a 7th week of gains for the S&P in spite of today's weakness. But look at those yields. The 10-year yield very close to 4.54. Once we breached 4.50, all bets were off. We're almost at 5.10 on the US 30-year yield. Now, obviously, Britain is its own story, but gilt yields are also climbing. We're at 5.14 now on the 10-year yield in Britain as turmoil just continues to spread there over Keir Starmer's prime ministership. Let's take a look at oil, though, because Brent crude is very close to $110 a barrel again, and that's bringing up WTI to almost 105. That dollar index is stronger as well. DXY stronger partially on sterling weakness. Let's get to some individual movers this Friday now. Here's Chloe Melly in London. Chloe.
Good morning, Bonnie. Figma is up this morning about 9% after the design software company raised its guidance and also posted better than expected results. So this is easing some fears around AI disruption, which of course has been such a big topic of conversation when talking about software over the last few months. But it seems that Figma is better positioned than some of its peers, and that therefore we're up quite strongly there. Moving on to Microsoft, which is paring some earlier losses after Bill Ackman's Pershing Square said it was taking a new stake in the company following a recent decline in the share price, saying that investors were actually underestimating the company's software. So we're down a little bit, but paring some of those earlier losses. And finally, Applied Materials is seeing quite a lot of weakness this morning, despite results that actually were very strong, and that indicates very strong AI demand. But it is getting swept up in that broader chip sector sell-off, where we've seen names in Asia and Europe be a lot weaker this morning. And so Applied Materials is getting swept up in that, and we're down about 2.5% this morning.
All right, we'll see if this is a meaningful reversal, Chloe, or if something else happens next week. That's Chloe Melly in London. The sell-off in bonds continuing to intensify, with 10-year Treasury yields now at their highest in about a year. Kelsey Berro of JPMorgan writing, quote, We expect the trading range for government bond yields to remain higher, but still bound by well-behaved inflation expectations and a high hurdle to start a new hiking cycle. She's fixed income portfolio manager at JPMorgan Asset Management, and she joins us now. Are you as convinced in what you wrote today, seeing these yields march ever higher, and pretty quickly too? I mean, in the last 12 hours, we've seen a real regime change, it would seem.
So it has certainly been a perfect storm. When I woke up this morning, there was a few things that I noticed. One is that oil continues to rise. There really seems to be, no ability to find a resolution in the short term to the problems in the Strait. And then also the political turmoil in the UK is also starting to bubble up again. While yields are maybe 5 or 6 basis points higher in the US, they're double that in terms of the move in the UK. And so it really has been a perfect storm to start the morning. And I think that the notable thing is some of this move higher in yields has been coming on the back of more confidence around the resilience of the U.S. economy. We've had better retail sales data, for example. The jobs data has been a bit better. But today, what you're seeing is that this move higher in yields seems to be biting the equity markets a little bit.
Right, because the economy won't stay resilient if inflation really gets its claws into the U.S. consumer once again, right? And particularly if those expectations on more. We're seeing 69 basis points priced in now for the Bank of England. When do we start getting hikes really priced in for the United States, and when is the pressure on Kevin Warsh?
Yeah, so right now, what I think the market is pricing is not necessarily a base case of hikes, but it's a risk premium associated with the possibility of some type of real re-acceleration. And I think that's because, energy has been in an interesting spot. So if you were to turn back the tape to March when this conflict started and ask yourself, where would energy prices be if we were to have no resolution by now and we're moving into June, people would say energy prices should be a lot higher than they are today. And what has happened is energy prices have moved higher. Gasoline has moved higher, but you're in this uncomfortable spot where energy prices are putting upward pressure on inflation, but energy prices are not high enough or haven't been high enough yet to really get the markets to be concerned about real demand destruction. And so in this uncomfortable period, the best thing that I think the Fed has been able to do is communicate an on-hold path.
Sure, but how long will it take before the market really takes it seriously? I mean, we're at 105 now on WTI, and we've been above 100 for a long time, and there is nothing that suggests that the Strait of Hormuz is suddenly going to, quote unquote, reopen.
Right. So here's a couple things that I'm thinking about in terms of round numbers. So we've moved to around 450 on gasoline. And what I would say there is when we talk to our retail analysts, and our retail analyst is out talking to management of companies, they're saying that at 450 on gasoline, you're seeing some substitution, but you're not necessarily seeing clear signs of demand destruction. If we head towards $5 per gallon on gasoline, that's where you start to see a little bit more pain and a little bit more friction. And so that's really what I'm going to be watching as it relates to the consumer and how they're going to manage this energy shock.
So you also said that you don't view the labour market as a source of inflation that should lead the Fed to entertain a hiking cycle. How long, though, can the Fed stay on hold for?
Yeah, so I mean, in a way, this is somewhat similar to the pattern we saw last year. 10-year yields actually peaked in the spring of last year around these similar levels. There was a similar situation where the Fed had cut in 2024 in the fourth quarter. They had paused. They had dealt with a supply shock. Last year, the supply shock was tariffs. This year, the supply shock is energy. There was questions around the extent to which policy was restrictive. There was questions around the extent to which the Fed would need to ever cut again. And the Fed ultimately was able to look through that tariff inflation and keep rates on hold for a period of time to reassess the landscape. And I will say it does feel like in general, we're in a similar situation, and the breaking point really is the labor market. So right now, the labor market is showing stability that allows the Fed to remain on hold. The question is, where is that labor market going to break? You know, I mentioned that I didn't see the labor market as a source of inflation. That's because wages continue to moderate. So if wages start to reaccelerate, then that's, I think, a different situation for the Fed. It's not just an energy shock.
And to a certain extent, yields at this level do some of the Fed's job for it, right? What is the next danger level that you're watching? It had been 450 and 5% for many observers. We're now reached those levels. At what point does business get crimped in the United States?
It's a difficult question. You know, one of the things that I've been thinking about is the fact that this economy essentially has multiple R stars, so multiple neutral rates. So, you know, there's a lot of debate about if policy is actually restrictive right now. And I would say there's a lot of parts of the economy where it's pretty clear policy is restrictive. Just look at housing. Just look at investment ex-AI. But then you look at this AI economy, and you know, I'm not even sure that there is an R star that is restrictive for the structural demand that is emerging within the economy. And so it's a very difficult thing to say, essentially, because, you know, you do have parts of the economy that are constrained by current levels of interest rates, but you have a very important driver of the economy, which is the AI build out, which I don't think is at all sensitive to the Fed's interest rate policy.
Yeah, every day we seem to be seeing new sales from the AI companies into the debt markets. Kelsey, we have to leave it there, but thank you so much. Kelsey Berro of JPMorgan Asset Management. Now to other top stories trending on the terminal this morning. Pershing Square has taken a new stake in Microsoft after a recent decline in share price. Bill Ackman said on a post on X that investors have underestimated the company's software. Pershing Square will disclose its stake in its 13F filing later today. President Trump's latest financial disclosures show tens of millions of dollars in first quarter stock and bond trades, including purchases in Nvidia, Microsoft, Oracle, Boeing and Costco. The filings also show he unloaded holdings in Microsoft, Meta and Amazon. The White House says independent managers handle his investments. New York lawmakers are planning a tax on cash purchases of homes over $1 million in New York City. All cash deals have increased in New York due to high mortgage costs and have accounted for more than 60% of 18,000 transactions in the first half of 2025. Coming up, we get more analysis of the Trump-Xi summit from former U.S. Ambassador to China, Nicholas Burns. That's next. This is Bloomberg.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area, and then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
U.S. Trade Representative Jemison Greer there speaking exclusively to Bloomberg's Anne-Marie Hordern, and she joins us live now from Beijing as Presidents Trump and Xi wrap up their two-day summit. So the trade representative telling you things that maybe you already knew, Anne-Marie. What new came out of this summit?
Well, Vonnie, nothing really new, nothing concrete. We're still waiting on some more clarity, even from the items Jemison Greer talked about, the USTR representative, in terms of the agricultural agreements, the Boeing jets. We still need to understand from the Chinese side that, yes, this was agreed upon, volume size, what kind of agricultural projects, is there going to be energy flows, something else the president discussed in an interview he gave here in Beijing to Fox News. So it's very vague. We need a lot more details. Something that we know was not discussed, according to Ambassador Greer, was semiconductors. There's been a ton of fanfare and a lot of excitement for some and some a little bit critical. Why Jensen Huang was added on this trip, and everyone thought that meant that chips were going to be back on the table. There's this Reuters report that the U.S. green-lit the H200s, which they already did in January, for some Chinese firms to buy them. And Jamieson Greer made it clear that semiconductor export controls wasn't discussed in the bilateral meeting and that it's going to be up to China to make that determination.
All right, Anne-Marie, wonderful reporting out of Beijing all week. Anne-Marie Hordern in Beijing. Thank you. Joining us now is former U.S. Ambassador to China, Nicholas Burns. And thank you so much for joining us, Ambassador. As you observe the 2 days of meetings that we've had this summit, how do you see the U.S.-China relationship having evolved over the last year, from when there was a freeze-off over trade to then sort of détente and now this summit?
Well, first of all, I think it's very important that President Trump went to Beijing. That might seem like an ordinary thing to do, but this is a very difficult, complicated relationship, and there's no substitute for the two leaders working together, because Xi Jinping in China makes all the big decisions. They're going to meet again in September, perhaps 2 or 3 times this year. I think that was probably the most important thing that came out of this summit. It is a little bit surprising that they didn't announce a continued tariff and supply chain truce. In fact, Ambassador Greer indicated that those issues remain to be worked out. I don't expect we'll see a return to the extraordinary trade wars and supply chain wars of 2025, but they haven't worked out all of the deals there. And again, as your correspondent said, as Anne-Marie said, surprising on NVIDIA as well, Huawei just, DeepSeek, the Chinese AI firm, just announced a new model, and they use Huawei chips. And so I think the Chinese are in a situation where they don't want to rely on American chips. They don't think they're reliable, and that may account for the reason why there was no announcement on NVIDIA.
Yeah, absolutely. Can we at least say that we're not fully decoupling now, though, a prospect which would have been welcome maybe a year ago before this truce was signed?
I think that's a very important development. Scott Bessent, Secretary Bessent, said 10 days ago that the two sides had agreed not to decouple this big relationship. It was $750 billion in trade in goods and services as recently as 2024. So it's very important for the American economy, the Chinese economy, I would say the global economy, that these two economies stay integrated the way they have developed organically over the last 40 years. But there's also no question that both sides are de-risking. And that makes sense. It makes sense that the United States should not be allowing the export of sensitive dual-use technologies into the Chinese economy. That'll just help their companies compete with ours. It'll help the People's Liberation Army. And so if that's what's going forward, and Ambassador Greer did say that there'll be a board of trade and a board of investment that will work out some of these difficult economic and trade issues, that could possibly also be something positive going forward.
Yeah, we're hearing a lot from the US side. It would be nice to have confirmation from the Chinese side, right? But in your estimation, how long can this trade truce last? And will China make good on its promises to not save all the critical minerals and critical rare earths for itself, and to continue with its double-digit purchase of agricultural products?
Well, that was the big surprise for me from this summit. I had expected that they would at least announce a continuation of the agreement from last November in South Korea, when Presidents Xi and Trump met, that they would have a supply chain truce, that neither country would take off the market critical materials such as Chinese rare earths, and a tariff truce. Not that tariffs would not be diminished, but that there be some predictability for the global market. Ambassador Greer, in the interview with Bloomberg, gave the impression that those issues need to be worked out. So let's hope that the two can succeed there.
Can I ask you about foreign policy, Ambassador Burns? Did you feel like China's position on Taiwan was a little more maybe aggressive or to the front than you would have anticipated? Or was it maybe a tactic to not have to talk about Iran, perhaps?
Well, the Chinese always raised Taiwan. I thought President Xi was particularly shrill, actually, in what he said. What he said was, if the United States crosses China's red lines in Taiwan, there could be a conflict between the United States and China. That statement was meant to intimidate the United States and President Trump. And so what I'm looking for right now is, will the United States go forward with the major arms packages to Taiwan that the administration had set up but had put aside in anticipation of this meeting. No American president for half a century has allowed the Chinese government in Beijing to decide for us or to influence us over whether we fulfill our legal commitments under the Taiwan Relations Act to provide defensive military technology to Taipei. So I think that's a big question going forward, and I hope very much that the Trump administration will go forward with the arms package to show the government of China that it can't coerce us from doing what's in the American national interest.
Assuming that that's the case and the US president, isn't deterred by anything that the Chinese premier has said, will that antagonize China, or will China just be expecting that as status quo?
Oh, it will certainly antagonize them, but this has been the back and forth we've had really for half a century on Taiwan, ever since President Nixon's visit back in 1972. And so we don't want to be in a position where suddenly we effectively are blocked from doing what we have to do because of angering the Chinese government. That is part of the reason why this is the most combustible, the most difficult issue, Taiwan, in this relationship.
Ambassador Burns, strategic stability, is that our new catchphrase going forward, and is that a positive phrase for you?
It's a new Chinese catchphrase, no question. They unveiled it yesterday and again today. The Chinese like to frame big power relationships with catchy titles. I'd be a little bit wary of this, because once you agree from the Chinese side in a strategic stability construct between the two countries, then if we do anything that upsets them, they can accuse us of violating this so-called strategic stability pact. In essence, this is going to remain a very competitive relationship, militarily, especially technologically, because we both want to be first market movers in AI, quantum, biotech. And so I think you didn't hear the Trump administration repeat that phrase, which I thought was wise.
Ambassador, as it pertains to Iran, we obviously have Vladimir Putin visiting China in a few days. Close relations there between the premier and Putin. And obviously, Iran continues to simmer. The US would have asked China for maybe not help, but some kind of action in terms of the Strait of Hormuz. How do you see that progressing? Does China weigh in to clear the strait or to impose some kind of a request on the Iranians?
Well, I thought it was right for President Trump to raise this issue so forthrightly. China ought to be helping the United States and the rest of the world, the Arab world, in getting the strait open with Iran, not as the toll keeper. That's an international waterway. And it was good to hear that the Chinese position repeated that it wants the strait to be open, that it does not want Iran to become a nuclear weapons power. But these are old Chinese positions. They're not new. And I think the question remains from this particular summit, will China now weigh in and use its influence, which is considerable, with the Iranian government to push them towards a ceasefire agreement that will include the strait opens and no ship has to pay a toll to get through? I think it's going to be difficult for the Chinese to do that because they have contrary views here, or aims here. On the one hand, they want the strait to open. On the other hand, they don't want to make life easy for the United States. This is a competitive relationship. They don't want to be seen to caving into the United States because they do have a strategic relationship with Iran. So what I'm watching for is, to what extent does China actually do anything to help here? I hope they will, but I'm a little bit skeptical.
Yeah, and will we know what it is exactly they end up doing in the end anyway? When you watch the pomp and circumstance of the arrival and the ceremony and so on, did it occur to you that perhaps China has cracked President Trump and his personality in some way? Or will President Trump have seen that for perhaps what it was, an effort to, curry favor, some soft diplomacy and so on?
Well, they certainly rolled out the red carpet, but they do that for all visiting leaders, including American leaders in the past. The Chinese have a very finely hued attitude towards protocol, and they're very formal. And you saw that they can produce elaborate ceremonies to welcome foreign guests. I thought it was appropriate, frankly, And when President Xi comes to the United States, I'm sure that President Trump will reciprocate. You know, you need to be polite. You want to honor someone else's culture in going. So I didn't think it was over the top. And I certainly thought it was appropriate to the occasion. These are the two strongest leaders in the world, the two major global economies. And so I think it's important that this channel is open between the two presidents. President Biden had a good, constructive relationship with President Xi, and President Trump does now as well. That's good for the United States because you've got to be able to work directly with President Xi Jinping in China's top-down system.
So different from the rhetoric we were hearing just more than a year ago. Ambassador, thank you so much for joining us this morning. Ambassador Nicholas Burns, former US ambassador to China. Now, look at what's ahead today. We have economic data on deck, Empire Manufacturing and Industrial Production, 8:30 and 9:15 respectively. Of course, they're pretty volatile data. We get 13F filings from the first quarter after the market closed today. And today marks Jerome Powell's last day as Federal Reserve Chair. He remains on the Fed board until January 31st, 2028. Some micro movers now before the bell. Figma up more than 8%. It's extending post-earnings gains. It boosted its revenue forecast, and its results really eased investor concerns over any AI disruption in that industry. Applied Materials off just a little bit after a jump in prices initially. The chipmaker beat the street expectations for its sales and profit forecast thanks to soaring AI demand. And then Bill Ackman posting on X that Pershing Square has taken a new stake in Microsoft and its erased declines is now higher. Here's your macro picture for the day. We'll be watching bonds. Look at the UK 10-year yield at 5.14. The US 10-year yield, though, almost at 4.55 right now. That's it for Bloomberg Brief. Stay tuned for surveillance.